For the second time this week, inflation has come in hot. We're going to be talking about that, the latest retail sales data, how that could be leading to the ugly word of stagflation, and much more today on Money Never Sleeps. Thank you for joining us once again today, ladies and gentlemen. Before we get going, do us a favor, hit that like, subscribe to our channel. Nothing Kevin or I say is financial advice, so please do your own research before making any buys or sells. Kev, we got our second inflation report of the week. This time it was the producer price index. We got some retail sales data, and all of it is pointing to inflation continuing to be quite sticky.
I was muted for a second. Yeah, absolutely, man. It just seems like everything's coming in fucking red hot. It's like a bunch of hot dogs in a boiler. Just all the data's bad, man. What can you say? I know. I got you caught me off guard because I went to see exactly when the 1 year anniversary was for the show, and apparently it was yesterday. So happy 1 year anniversary, everyone of Money Never Sleeps.
Okay.
And we didn't do a show yesterday, so today counts as the 1 year anniversary. But yeah, it's bad data. But I'm actually surprised that the market decides that bad data might be worth selling off. Right. That's something
Chris Hoddle with the awful joke of the day. Greatly appreciate it. Thank you so much for that. And 1 year of doing this show. Pretty cool. It's been fun. It'll continue to be fun. And we're just going to try to do the best that we can to cut through a lot of the bullshit because, boy, howdy, is there a lot of it. Let's talk about the numbers today. Retail sales came in 0.6% up. That was down from the expectation of 0.8. So we're starting to see a little bit, some issues there. Also, the previous month number was revised down, negative 1.1%. It wouldn't shock me if we had a revision on this one as well. We saw producer price index come in double what it was expected to be, both on the headline and the core number. 0.6% on the headline, projection was 0.3, 0.4% on the core number, projection was 0.2. So now we are seeing, and year over year, higher than expected as well. The headline PPI year over year was 1.6%, up from 1% last month. So it is proving once again to be problematic. We have the Fed meeting next week. There is a 0% chance that they are going to be cutting rates at that one. It's looking very unlikely for May as well. And the chance of that happening in June is starting to slip in addition to that.
Isn't it really shitty just how Powell sentiment in November was so different than how it's probably going to be at the next meeting? Like, they pretty much just said, like, yeah, we're pretty much done up here. Don't worry about anything. Inflation's coming down. Everything's gonna be okay. And the market's fucking rallied off of that for 4 months, almost 5 months now. And now guess what? Data's picking up because we got ahead of ourselves, right? That just goes to show you that there's problems in the system, and a lot of these people that are in charge just can't fix it, right? That just sometimes the debt markets, the way that the economy works, is bigger than the people that are in charge of it. And I think right now, and again, with Janet Yellen also saying that I regret that saying that inflation was transitory, kind of shows you that the central bankers are kind of clueless, or they're just hoping that somehow something works out in their favor. But I think all the central bankers are just kind of scared to make a move up here, especially with this data coming in, because in the words of me, it's not great.
It is not great. Let's talk about stagflation for a second, because that is starting to be on people's minds, and rightfully so. The ingredients are there, and it is a shit sandwich, but we're starting to see it come to fruition. We have this inflation that has ticked back up. It got a ton of momentum down when they were raising rates like crazy. Now starting to tick back up again. We have decreased demand, right? We saw the retail sales come in under expectation. We saw the previous month be revised down, and the labor market continuing to show at the revision, like once the numbers get revised, that it is not as strong as a lot of these people expect, want you to believe that it is. So, Kevin, do you think that we are heading in that direction? Stagflation, what no one wants to deal with. Is this going to lead us into, the true lost decade?
No. I might be one of the only bears that kind of doesn't think that we are going to see rates higher for longer. I think that we might see it postponed to the point where we're not cutting for maybe a few months. But I definitely do think that the conditions right now for stagflation are definitely present. Like it could happen. I just don't necessarily think that it's going to. I think at some points when we see demand drop so significantly that people begin to corporations start to lay people off, and then we start to see a lot less spending. A lot of that happens. Eventually, that's going to catch up with the markets, and we're going to see deflation. I thought that's the direction we're heading. It's actually the direction that a lot of other countries are heading right now. In the U.S., we're being a little bit more resilient to the point of allowing this to happen. And again, the only reason that inflation's kind of picking up here is because energy's prices are so elevated up here as well that it's causing a lot of people, obviously the PPI producers are having to pay a lot more in order to produce goods, to transport them. That's kind of the problem right now. But I think that oil market, once that gives, we're going to be seeing what we really should be seeing right now is with demand being so low, we're probably going to be in a deflationary area. Now, am I saying that we're going to see deflation for years? No, I think it's going to be short term. I think it's going to be, a year to two while everything kind of settles back down to a place where, okay, now the labor market's topped, the unemployment rate's topped. It's going to come back down. People are going to start to, come back into the economy. You're going to start seeing QE to the point where they're going to start printing money, and it might lead us into another hyperinflation, area for the United States for the next 15 to 20 years. That's very possible. But for the short term, I think the stagflationary worries are maybe a little bit overblown. We will get to the point where demand is just going to absolutely take precedent over everything that's going on in the market, and we're going to start to see that people not only don't want some of these goods, they can't afford them like they did back in 2021.
Okay. Anything else on the reports today or the discussion around it catch your attention?
Not necessarily. I think it's very on par with what's happening in the energy market right now with oil. It also goes to show you that maybe prices are being gouged a little bit just so that they can make profit on some of those margins because they're having to pay more to produce some of these goods. But for the most part, I think that retail and just people in the economy itself will be able to call bullshit on this in due time. It's just not going to be maybe as fast as we'd like.
We're seeing on the charts right now, the VIX has taken a nice little run up. It is back to 14.5. It got to almost 15 earlier. The dollar has rebounded slightly back over 103. Tech seems to be getting hit the hardest today. You have NVIDIA down 3.5%, Tesla down 5%. I know you want to talk about Tesla as well, so that'll be our transition into that. What are your takes on currently what's going on with Tesla? Elon out there pumping Dogecoin. That seems totally on the up and up. What are your takes right now when it comes to that?
Yeah, so there's a few things we have to go over in tech. And, today is the last day that a lot of these tech companies can buy some of their stock before the buyback window, the blackout begins where they can't buy, as many shares as they were from the period in which it opens, that window. So what we're seeing, I think, here is a bit of taking profit. And I actually have some proof that some of these tech companies are taking profit. Palantir and Coinbase insiders, and I'm not saying insiders as just people who work for the company itself, disclosing that they've been selling off shares. It's really interesting with Tesla, though. The reason I want to bring this up is because I said Tesla was probably going to go to 164. I can't remember which episode it was. I think it was when Tesla was around 208. I said that 164 is a huge level of support. It broke underneath it. So let's pull that up right now. And I kind of want to show you what's going on here with Tesla. Now, Tesla, that's a monthly. It's not pretty, and we don't want to look at that one. We want to look at the daily. There we go. The reason why I am very bearish on Tesla, number one, it's below the 200 EMA, and it's below the 50 moving average right now, right? Could there be a squeeze? Yes, but your resistance is going to be the 50 moving average for the time being. I think things for Tesla are on the down and down, not in the up and up. If we're looking at what a lot of people are having problems with, it's spending. And what do you need for a car that's, $35,000+? Probably a loan. We're seeing that the banks are not giving out those loans. So it makes it really hard for a lot of these EVs and these specialty cars and even car manufacturers in general, like Fords and GMs. It's going to be hard for people to buy some of these vehicles, right? We saw that Ford's electric units, they were selling some of those Ford pickup trucks that were EVs for, I don't know what it was. It was like less than $12,000 at some point. They're dropping the prices of them significantly. Again, they're probably the base models or whatever, but still, they had to drop the cost because they can't afford them. I mean, look at Rivian. Rivian was selling cars for $70,000. Now they're in the $35,000 to $45,000 market that they're trying to aim for. So they're definitely trying to find demand at one of those price levels. And I think Tesla is no different. I wouldn't be surprised if Tesla does cut some of their rates, or not the rates, but cuts the price of some of their vehicles going forward. But at some point, they're going to have to stop. And if that does get to that point, we're probably going to see the stock plummet significantly. And again, we're looking at this as an ABC corrective pattern. And I think it's kind of playing out the best out of all of the tech stocks so far. It's also the one that's probably the biggest sign that, maybe some of these high-end luxury items aren't going to be as easy to acquire for some consumers. But I'm looking at this to the point where, okay, right now we're probably going to head towards, what is this? 151 or so? That's the level of support that would be from back here. It also fills this little gap that's down here. But I do think that there is room for a bounce up. Maybe that's this wave 2. Maybe I just got to pull this up a little bit. We get a wave 2 bounce, and then we come down for a hard wave 3. But the targets for Tesla have not changed. This one is actually playing out the best out of all of them, like I said, to the point where we could end up. I'm thinking that between $103 and $65 or so, $64, seems like that's a very likely range for Tesla to go to. That would bring us down to COVID, I think, that level, that height or so. Yeah, right around there. That's where we found some support, pulled back, and then it kind of rallied through that. So I think this range right here between 103 and $65 or so is going to be the nice range to look at. I do think that we might get a bit of a bounce here at 105, but it's breaking through a lot of these support levels that we had, and I don't think there's any signs of stopping. I mean, today itself, look, 5% for Tesla. It's not necessarily a great look.
No, it is not. Let's move on from Tesla. Let's talk about MicroStrategy. I know that you have some thoughts when it comes to Saylor and everything he's got going on there. Just continuing to add crypto to the bounce. Dear mother of God. Yeah,
we're going to talk about this.
Yes, I think we should talk about this. Why don't you give everyone the breakdown of MicroStrategy, what their current strategy is, and why you think that you might be calling shenanigans here.
Yeah, it's called MicroStrategy. It could be Michael's strategy. I'm calling it MacroStrategy because we're gonna have to look at the big picture of how their prices played out over the entirety of this company's listing as a publicly traded company. So when we look at something like this, I mean, look at this. This is insane. I mean, from where is this? The low in 2024, beginning of this year, to where it is currently, or to where it went, is up 309%. Where it currently is, it's about 275%, right? And it's only pulling back today because of Bitcoin. Now the question is, what does MicroStrategy do? Nobody knows. And I mean, that is in terms of investors who are betting on the success of them, right? They know that they have Bitcoin. That's about fucking it. But the thing with them is they're not necessarily a company that was doing extremely well prior to Bitcoin. So we got to look at this on the monthly. And I want to see how that price action is followed when we have these mania pumps in MicroStrategy and where it leads us to, right? Obviously, the dot-com bubble back here, you saw that it was a straight vertical line for 5-6 months there, topped out at $3,300, $3,350 or so, and then in the subsequent months, by the time we get to 2000 and say 2001, we're down 99%, right? So it's a big move to the downside. And let's look over here. We had nothing since 2000 all the way to about 2020. So about 20 years of nothing there in MicroStrategy. And then you had a really good pump up back in February 2021. That's when Bitcoin hit 60,000. Why? Because Michael Saylor was buying the shit out of it. And then you had the pullback. You had a little bit of a second rally here when Bitcoin hit 69,000 or so back in 2021. And then it pulled down significantly. So let's take a look from this mania top up here and to where it finally ended up. That's 89% down that this moved once again. Now, again, the reason I'm bringing this up is because, maybe history doesn't repeat, but it definitely rhymes. And so far it's done that twice. Is the third time a charm if Bitcoin isn't the inflation hedge that we all think, and then it gets pulled down significantly because a lot of people sell this thing off. It'll be interesting to see, right? We're up currently this month 58%. Month prior, we are up, what is that, 104%? And the 2 months before that, 17%. And then I think there was 26%. And then we're down 20% back in January, which would have been the pullback that we saw with Bitcoin. So Bitcoin kind of is the reason why this thing is rallying. But I think that there's a good chance that we could see this thing absolutely tank if Bitcoin tanks, right? If this is the only reason people are buying and believe in MicroStrategy, and if their chart history has been any indication of what happens to this stock in the past, it could be another wick like we're seeing right now. And then, one day we wake up and it's down 40% because Bitcoin's down, $15,000 or something like that. It's very possible. The interesting thing too is, and again, I have no evidence that this is 100% happening, but I think it's a really interesting theory that people are having on MicroStrategy, is that Michael Saylor is selling off stock. And we do know, like I said, a lot of insiders are selling off stock, and he's taking that money, and then he's also taking money that he's raising for Bitcoin, and he's pumping it into his bags of Bitcoin that MicroStrategy holds. Therefore, that kind of artificially pushes the price up of MicroStrategy because people are buying in thinking that they're going to make a lot more money because they have Bitcoin. It's a very interesting theory. I don't necessarily have any facts to support that, but I definitely do think that him buying Bitcoin here is definitely inflating the price of MicroStrategy stock, right? But again, I think the bigger the bag you have, the bigger hit you also take if anything does pull back. So it's a very fine line with MicroStrategy. I'm not necessarily bullish on this company one bit. I was looking at actually some puts on it, but the thing is with some of these puts, how much is it worth putting the capital up to fight this, or is it just better to wait for that Bitcoin to come down, and then you just kind of you're sitting here without the stress, the risk, your risk off, and then you can still get a really good gain on the knowing that Bitcoin's going to pull back. But I think fighting a lot of these mania tops, again, I will say this is pointless. MicroStrategy is just doing something that I think it's done in the past, and I think it will do something next that it's also done in the past, which is come down severely. I just don't necessarily know when.
So speaking about Bitcoin and coming down severely, we have seen a moderate pullback today. Nothing too crazy. It is fighting to stay above 70K. It went below for a little bit, currently down about 4% on the day. What are the funding rates with Bitcoin kind of leading you toward right now as far as the next move that this is going to go? Recently, if you're looking at the daily charts, we've seen, big runs up, a day or so down, and then it continues its climb. Is that going to be the case here, or do you think that we're going to start to see a little bit more of a pullback and a steeper correction than we've had in the last few weeks?
I think these idiots are still fucking playing the futures game with leverage, unfortunately, looking at this funding rates. So we'll take a look at that. Even after the pullback and kind of the news that we're seeing a lot of these insiders selling off stocks of crypto companies or crypto related companies, we're still seeing, funding rates being significantly higher than the spot price. That's where we're seeing all this red across the board. And we're seeing it across the board. I mean, there's not one piece of green on here right now. Don't mind that little green flash there. But this right here is the true funding rates, the current funding rates, all red. Bitcoin, once again, on Binance being the most leveraged across the Bitcoin's prices. Let's look at the yearly. 47%. So it's about 4.5 or so times higher than it should be. What this is telling me is that people are still using leverage, thinking that this is going to go up only, and this is going to be a long play. I think this is a very dangerous place to be with Bitcoin. Again, I think it could go up $6,000 to $8,000. It's very possible it could see something like that. I also think that it could pull back roughly $18,000 to $20,000. And again, I'm not saying overnight. I'm saying definitely over the course of a few weeks, it's possible we could see that pullback happen. We saw that pullback from 66K all the way down to like 58K that one day, and then it bounced right back up. Again, it seems like it's very possible something like that could happen. I want to take a look at the liquidation map as well, so we can just see where everyone is kind of positioned right now with Bitcoin. So to the upside, if we want to push Bitcoin up, we're looking at 81,000, 82,000 or so. It's about just short of $3 billion. But if we go down to, say 60,000, it's $6.43 billion. Now, this is only the 30-day. I have no idea how much liquidity is sitting much lower than that. People that were going long somewhere around, 30K or so. Billions of dollars, I can tell you that. So if anything, the amount of liquidity that is sitting below us as opposed to above us is way greater. And we're also seeing people massively on the wrong side of this trade, in my opinion, seeing how long everyone's been, how much they're paying in funding rates to short positions. It's a very dangerous play right now with Bitcoin. I don't believe that we're going to go into the halving at the current prices that we are. If we do, that's fine, but I think that we will pull back somewhat as we get into like that April post halving time frame. I just think that right now we are front running the shit out of it. I mean, right now we're under 70,000. Not declaring victory right now on the show that it's under 70,000, but it's definitely starting to see cracks, and we start to see more volatility at the top. Kind of tells me that there's a lot of people that are trying to play this game. People that are buying, people that are selling, getting out of it. It's very similar to what we're seeing in the indexes as well, where the S&P will be up 50 points one day, down 30 the next. We're starting to see that volatility increase in both directions, and that's not necessarily something you want to see if you're expecting the price to go up from here after such a sustained move to the upside. So definitely something we're going to want to watch moving forward. The other thing I do want to show, also this I completely agree with, I keep saying Monster, like the job company, but it's MicroStrategy. MicroStrategy acting like a BTC ETF, 100%. Completely agree, Chris. Let's take a look at this tweet. This is from Bitfinex, fun guy. This is pretty much showing you all the insiders that are selling Coinbase stock right now. All of it's pretty much Brian Armstrong. It's reporting the news. Catherine Hahn, I believe. But we're seeing, how many shares they're selling. It's 500 up here, 1,400, 2,100. Coming down here, we can see that there's 21,000 from Brock Lawrence. It's just short of 15,000 from Brian Armstrong here. So they're definitely selling off a lot of shares. They're taking profit in terms of what they're doing on Coinbase. And the reason I say this is because I want to show everyone what I'm seeing on the charts with Coinbase as well, is that they're seeing a really good pullback today, right? I mean, it's a significant pullback compared to where they were. We're down just under 9% right now. Yesterday, down 1.72%, down 0.57%. Looking at this here and how much it's pulled back and how far overextended you are from the 50 moving average, kind of tells me that they ran this shit up with Bitcoin and all these stocks. Now they're kind of starting to dump it into the halving. It's a very interesting play that I'm seeing them do right now. Again, I don't know if we're going to see another bounce to the upside. I have no information to that, but I do know that with the stock buyback window shutting down today, that it makes a lot of sense why they're selling off before there is a bigger sell-off. So just something to kind of keep in mind across the board with crypto. And I think that Bitcoin might be one of those things where it's like, well, if no money's kind of going into our stocks, do we necessarily want to be pumping anything else into crypto because people are going to start getting the idea of selling off? Who knows? I'm not going to make that assumption, but it definitely does make a lot of sense for why a lot of insiders are selling off prior to today's close, because I think once that money's not pumping in, we talk about like bank leverage. Once that leverage is gone, the main source of money that's pushing this price up, no one's going to be able to keep that price up. That's the thing.
Yeah, the entire market starting to move south as we head toward the end of the TradFi day. About 38 minutes left before market close. ETH down just over 5% today. AVAX similar. Solana holding a little bit stronger, but that had a hell of a run up overnight. Got as high as 174 before pulling back and now being pretty much flat on the day. Anything else in the crypto or TradFi markets you want to discuss before we wrap it up?
Yeah, two things real quick. The Russell is down 51%. Not 51%. I wish it was down 51%. It's down 51 points today, 2.5%. But look where it's going right to. I was saying that we were probably going to put in that last wave up higher, and then we're going to pull back. Looks like we did right around that 2100 level. Looks like we're going for the 50 moving average right here. We might get a bounce off of it, but again, the reason why I keep saying that small caps are a pretty big indicator of where we are is because if this is the sustained move and the momentum that we have, it's just a little bit higher after, roughly trading for over, almost a year and a half or so of just sideways consolidation. I think you're going to test these moving averages, and if they don't hold, you're probably going to be below them. And in that case, you're looking for support, huge level of support down here. But if, selling pressure does come in, we're looking a lot lower for the Russell. But this one is kind of telling you where the economy really is, as opposed to the S&P and also the NASDAQ. I wouldn't be too concerned about those because I think when those do go, they will go, mainly because the big tech stocks are the ones that are hurting, right? I'm interested to see if Nancy Pelosi closes that NVIDIA short or the NVIDIA call at any point. I think that's going to be also a really good indication of what happens. But I think that's pretty much it on the tech front for the main ones. I just want to talk about the Palantir because I did put it in the thumbnail real quick, and it's just 2 seconds. Palantir is a company that I honestly have not been paying attention to, but I saw their CEO yesterday just talking crazy about how people who are shorting this are absolute cokeheads, or no, he didn't say cokeheads, but they're like, they need to support their habit of, snorting coke, and we're trying to be an innovative company. We're going to do our thing and they're going to do their thing. But then at the same time, Palantir insiders are selling the shit out of their stock. Peter Thiel, who's the founder of it, offloading. And I believe there was some reporting. Again, I'm not sure 100%, so don't take it as fact. But the CEO who also called all those people, that have a coke habit for shorting, I think he was also offloading some stock if one of the reports was accurate. So
you're going to say that he has a coke habit himself, which he very well might.
well, I mean, if you got hair that looks like it's got a bunch of blow in it, maybe it does. He's a crazy looking guy, but at the same time, I thought it was just hilarious because how he's saying that people who short are, coke fiends. I'm like, does that mean I'm a cocaine bear? Maybe. I don't know.
The
But
cocaine bears are in full force.
But whenever I see insiders selling and then they're saying they're going on the news talking, amazing about the company, I'm like, this thing probably ain't going to do so well. But we'll see how this one plays out. This one we'll monitor. But big gap down here between $19 and $18 might get filled if the 50 doesn't hold. We'll see. Below the 200, that'll be dangerous. But that's all I got today, man. I think that we can wrap it up there. It's going to be interesting tomorrow now that the buyback window is closed and tomorrow's OPEX. So no money coming in.
Yeah, OPEX tomorrow. We're less than a week away from FOMC. Appreciate everybody who joined us today. If you have not yet, like, subscribe, drop a comment, share us out on socials if you think that it's worth sharing. We appreciate that greatly. We'll be back tomorrow to close out the week. Thank you all very much. Have a safe day in the markets, and we will see you next time. Later, Randy.
Take care, everyone.